Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwago. Morocco's economy to contract 13.8% in the second quarter and 4.6% in the third quarter. Egypt's business activity rebounds to 4 months high. Plus, Kenya Airways to lay off staff and reduce network and assets. We begin the show with intraday market numbers, and here in Africa, which were mostly positive except for Nigeria's index, which shed 0.40% due to the 3.43% decline on the consumer goods counter. In South Africa, the JSE index rose 0.58%. Elsewhere, Egypt's EGX30 soared 1.21%, while Kenya closed positive on Friday. And major markets in the Gulf region were all in the positive territory at intraday, with Dubai's index surging 1.23%, while Abu Dhabi's index rose 0.34%. In Saudi Arabia, the main index advanced 0.42%, while the Qatari index was higher by 0.10%. European markets bounced back early today as investors focus on the prospect of economic recovery and progress on potential coronavirus drugs, shrugging off concerns about the further acceleration of the pandemic. Well, Conrad is on board this week. Hello, Conrad. Good afternoon. Good to see you again. Well, stocks in many markets in Western Europe have started the week on the upside despite COVID-19 infections resurfacing, for example, in Spain. What's the mood like at the stock exchange in Frankfurt? What's the German index DAX doing?
Well, the German index is rising again, and this after the German DAX last week gained 3.6%. So quite remarkable to see even more demand for company shares here at the beginning of this week. Behind this are several factors. One is that businesses in Germany are experiencing a bit of a recovery from the corona lockdown. We got factory orders today for the month of May. They're up 10.4% compared to April. And if we take into consideration that the slump in factory orders in April was 30%, obviously the positive May numbers are a big reason for relief. What else is happening in China? Optimism on the markets was pretty positive this Monday as well. Chinese blue chips rose to the highest level in 5 years, and this, of course, is something giving the markets here in Western Europe a bit of an extra boost.
And Germany has taken over the 6-month presidency of the Council of the European Union, and this week a number of announcements are on the agenda. One of such is from Chancellor Angela Merkel. What's on her agenda for Europe, and what's most important for the markets?
I have no connection to Lagos. I can't hear you if you're talking to me.
Oh, Conrad, I don't know if you have the audio back to you talking about what's on the agenda of Angela Merkel for this week. I guess we're losing that audio there with Frankfurt, but we hope to get back to Conrad as soon as we're able to rectify that. In the UK, the construction sector rebounded in June as house building led the way with the fastest rise in activity for nearly 5 years. Let's bring in Juliana now for details. Hello, Juliana. Good afternoon. Well, UK construction has returned to growth. That's encouraging, but is that a market-moving data this intraday?
Good afternoon, Chimeze. It absolutely is market-moving data. The FTSE started off pretty much very well at early trading, and at intraday, it's improved vastly. The all-share is up 1.94%. The FTSE 100 is up by over 2%, and the FTSE 250 up by 1.48%. And in currencies, the British pound is up against the US dollar by 0.09%, down against the euro by 0.38%, and up against the Japanese yen by 0.16%. This PMI construction consumption data is really welcomed. We've had improved PMI data from both services and manufacturing, but this is the top of the pops, as they would say. Construction, as you said, is really been boosted by activity in the housing sector. Lots of new housing have been constructed over a period of time. And even though house prices are a little bit slow at the moment, we are expecting there to be more of a boost, as unlike what we saw during the 2008 financial crisis, which really saw bank lending paralyse, that's not the case this time around. So hopefully lenders will be buoyant and try to give out to the market as much as they can. So anything over 50, of course, is expansion. So really, really significant to show that between the month of May and June, there's been a significant increase, almost a 50% increase in output activity. Is really great. And as you can see, the markets have reacted.
Absolutely. Well, the UK's big four accountancy firms have been told to fence off their auditing operations. They have until 2024 to do so. Why has this become imperative for these firms to take this step now?
Yes, I don't think it's a priority for the firms. It's more of a priority for the regulator, the Financial Reporting Council. There have been significant stories across the world, most recently Wirecard, where some firms have had major accountancy holes, auditing gaps, and they're wondering why this is the case. When it pertains to the big four, so that's KPMG, Deloitte, PwC and EY, there are two giant collapses that the Financial Reporting Council are referring to. That's Carillion and BHS, the retail department store. And so what the legislator is asking these big four accountancy firms to do is to remove their auditing arm from their normal accountancy day-to-day runnings, because they don't think the two can work mutually together. There have been too many mistakes, too many mishaps. A lot of MPs have actually been asking there to be a lot more legislation around how these accountancy firms are conducting themselves. Are they able to counsel themselves and police themselves? That's a big question. And there are also some suggestions that perhaps there are incentives for these big four accountancy firms to not ask these companies some big questions, which is why they're allowed to collapse with such significant holes in their funding. So it's an intricate move, and it's something that is going to take time. There's already new legislation coming in place in October. I believe they've been given until 2024 to completely erase and remove and separate auditing from accounting. But it's a big story and likely to grow, not just affecting UK-based companies either.
And we'll continue to keep a track on that. Well, the Lloyd's Banking Group Chief Executive Antonio Horta Osorio is to step down next year after a decade-long tenure that included the lender's transition back into private hands after its £21 billion state bailout during the banking crash. Why is he leaving now?
Quite simply, he's retiring. He's been at the forefront of extremely senior banking for several years. He was at Lloyd's, which is possibly Britain's biggest bank, for 10 years, and it's time for him to step down. He is going to be, his successor will be Robin Bundaberg, another real big industry name, very well known. He'll be taking over for him next year when he steps down. And unsurprisingly, shares were up from the Lloyd's Banking Group this morning as soon as they made that announcement, up 2.34%. And I think that's really because investors realised that even though the Portuguese exec was such a big name, in 10 years, banking has really changed. And there's so many disruptors that have come on the market to try and take them to task. And that's another reason why he has been heralded by his colleagues and his senior peers, who said that he's a great man and that over the past 10 years, he was really able to take and transform Lloyds out of that financial crisis and to make them again Britain's leading bank. He did release a statement. He said that he had mixed feelings about stepping down and that he is happy that Bundaberg will be his new successor.
All right, Juliana, well, I guess those are stories we'll continue to track in the course of the week. Thank you and enjoy the rest of the day.
Thank you.
All right, we'll move back to Frankfurt with Conrad, ready to talk to us. Conrad, yes, I was talking about Germany taking over the 6-month presidency of the Council of the European Union. And this week, a number of announcements are on the agenda, and one of such is from Chancellor Angela Merkel. So I asked, what's on her agenda for Europe and what's most important for the markets?
I think the most important single piece is the big recovery fund that the European Union is planning to set in place. 750 billion euros, in parts directly paid to countries which have suffered most from the corona crisis, and another part of the money is going to be given out as loans. This is going to be a long and tedious discussion process for the German Chancellor, as all of the 27 heads of state of the member countries have to be convinced of the terms of the recovery fund. What's more, always when a large member of the European Union takes over the seat of the EU Council, it's quite possible, it's quite likely that the big questions of the European Union will be discussed again. How integrated is the European Union? What's the future for the Union? And here today, influential German politician Wolfgang Schäuble, our ex-finance minister, gave an interview to one of the leading newspapers where he said that it needs more courage to restart the integration process, and that the euro currency union was not enough, but that the EU needed one common economic and fiscal policy. Bold words here at the beginning of Germany's presidency of the EU Council.
Banking sector in Germany seems to be in trouble, not only because of alleged fraud at Wirecard, that's a member of the German index DAX. Now, Commerzbank is making headlines, Germany's 4th largest bank. What's going on?
Well, both the CEO and the chief of the supervisory board of Commerzbank are giving up their jobs, which came as a very big surprise to everyone here in Frankfurt. Nobody or very few people had reckoned that something like this was about to happen. Commerzbank has a very aggressive investor, an activist investor called Cerberus, who for a long time has been putting a lot of pressure on the top executives of Commerzbank. Cerberus wants the bank to make more bold restructuring. And there's another important shareholder of Commerzbank, that's the German government, which, after the 2008-2009 financial crisis bailed out Commerzbank. It now holds 15% of the bank. The fact that the resignations of those two top executives now is seen as a sign on the trading floors that obviously the management has also lost the backing of the German government, the German taxpayer, who's a shareholder of Commerzbank. We're, of course, discussing a lot of things here. What is expected to be seen from Commerzbank? Maybe even a merger is something to happen again.
All right, Conrad, let's continue to keep track on those market developments there. The week has just started. I'm sure we'll have quite a lot to chew in the course of the week. Enjoy the rest of the day. And stocks in the AsiaPacific were higher during Monday's trading session, with shares in mainland China leading regional gains. The Shanghai Composite soared 5.71% to close at around 3,332.88, while Shenzhen Component rose 4.08% to finish its trading day. Hong Kong's Hang Seng Index also saw robust gains and rose 3.81%. Elsewhere in the region, the Nikkei 225 in Japan rose 1.83%, while the Topix Index added 1.6% to finish its trading day. South Korea's Kospi advanced 1.65%. Meanwhile, shares in Australia bucked the regional trend and edged lower, with the S&P ASX 200 dipping 0.71%. Overall, the MSCI ASX Asia ex-Japan index jumped 1.75%. We'll take a quick break now. When we return, we'll look at what the IMF says about the African oil exporters and how the coronavirus pandemic is impacting them. To stay with us. The International Monetary Fund estimates that the impact of the COVID-19 pandemic will cost Nigeria and other oil exporters in Africa a total of about $34 billion in revenue. The projected decline in revenue is attributable to the dwindling global crude oil prices, and this was by IMF's Director, African Department, Abebe Selese, at the African Ministerial Roundtable on COVID-19 impact on the energy sector in Africa last week. Joining me now to look at this is a senior analyst for sub-Saharan Africa at Docker Frontier, London, Matt Kinniger. Hi, Matt. Good afternoon. Good to see you.
Hi, good afternoon. Good to see you too. Thanks for having me on the show.
You're welcome. Well, the oil price collapse this year represents a severe shock to public finances for major oil producers, especially Nigeria and Angola. How have governments in these countries responded, and what can businesses expect from fiscal policy through 2021?
Yeah, so as you say, Nigeria and Angola have experienced the most significant disruptions to their budget plans as a result of the oil price crash. We've already seen the Angolan government say that it will revise down its budget this year. We are waiting for clarification on its budget plans for 2020. But overall, we expect deep cuts in spending and investment this year, followed by a bit of a stabilization in 2021, because we are expecting oil prices to stabilize here at Docker Frontier. Looking at Nigeria, we've already seen the government pass a revised budget, which has resulted in a reduction in capital spending, or the investment budget. But looking into 2021, we are expecting continued reductions into investment and recurrent expenditure. And this is because the oil price shock will have quite a significant effect on the government finances this year. It will be forced to divert more of its spending and its resources to financing its deficit. And so this will squeeze the funds available. In terms of what we expect going forwards from government policy, from fiscal policy, so both Nigeria and Angola will see tax rises this year and into 2021. And this is because governments will try to stabilize their fiscal position. But also, this sort of oil price shock has provided impetus to both governments to really reform their tax base and diversify their oil revenues. So quite a significant amount of change coming, I think, from a fiscal policy perspective over the next couple of years.
Now, there are several other smaller oil producers in Africa that, until recently, were benefiting from healthy oil revenues. How will the weaker oil price environment affect growth prospects for these economies?
Yes, that's right. So there are a number of medium-sized economies, especially in West Africa, that will be most directly adversely impacted by the decline in oil prices. Ghana is a very good example. They were planning a large expansionary budget this year in anticipation of healthy oil revenues. A lot of this was going to be directed towards capital expenditure ahead of the election that is planned later this year. But because the government is fighting an election, it's unlikely to cut spending and investment significantly this year. So we are going to see quite a severe expansion in its budget deficit, followed by probably austerity next year. So a bit of belt tightening next year. Côte d'Ivoire, on the other hand, is probably going to trim its budget, but because it has fairly stable government finances, it probably won't severely cut spending or investment. In contrast, Cameroon is probably going to be more directly affected. We are expecting the economy to tip into recession this year, partly because of weaker oil revenues. And another country worth mentioning is Senegal. Senegal was tipped to start oil production in the next couple of years. There have been major oil finds off the coast of Senegal, but the Senegalese president has just announced a couple of days ago that he expects oil production to begin a lot later, so by 2025 or a bit later. So this will mean that economic growth in Senegal, will remain lower for a bit longer than previously anticipated.
Now, given the importance of oil exports as a source of foreign currency revenues for countries across West Africa, what can we expect in terms of currency movements over the coming months?
Yeah, so across West Africa, we are expecting severe downward pressure on currencies, especially amongst the major oil producers. Angola really stands out. You know, the central bank has allowed the kwanza to be traded in a more flexible way. It's allowing the market to set the value of the kwanza, and we are expecting the decline in oil prices and oil revenues to push the kwanza to below 600 per dollar by the end of this year. Ghana is another country that is being affected by the loss of oil exports, so we have some quite significant volatility in the CD, but the central bank, the Bank of Ghana, has intervened to stabilize the CD. CFA franc countries like Cote d'Ivoire and Senegal are a different situation, of course, because their currency is pegged to the euro. But the big story for those markets is that we are expecting to see a delay to the implementation of the new currency, the ECO, for West Africa, for Francophone West African markets. And this is because the central banks are are focusing on stabilizing the economies, and they don't want to spook investor sentiment this year.
Now, last week, Nigeria's central bank weakened the naira at retail FX auction in a move to align the rates. What's your take at Docker Frontier, and what would that mean for foreign capital inflow?
Yes, the central bank is really is making a number of moves to reform the exchange rate regime in Nigeria, and the stated aim is to unify the multiple exchange rates. Any sort of reform in this manner is going to be positive in terms of capital inflows. We are expecting globally anyway more portfolio investment flows, especially into emerging markets, including Nigeria, over the coming months and years. And this is because investors will be seeking stronger returns, which can be offered by markets like Nigeria. But crucially, looking ahead, we're expecting the most significant impact on portfolio flows would be if the central bank commits to a truly unified exchange rate, and one that is more set by the market. So one where it intervenes less into the exchange rate and provides confidence to investors. So that's really important looking ahead. Thanks,
Matt, for your time. Matt Kiniger is a senior analyst for Sub-Saharan Africa at Docker Frontier. Thank you for your time, Matt.
Thanks. Bye-bye.
And Morocco's economy is expected to contract by 13.8% in the second quarter under the impact of the coronavirus lockdown. The state planning agency says the economy may shrink by a further 4.6% year-on-year in the third quarter as restrictive measures are loosened. The economy grew 0.1% in the first 3 months of this year. Both domestic and foreign demand are expected to improve in the third quarter after taking a hit in the previous 3 months. And Kenya's Airways plans to lay off an unspecified number of workers, reduce its network, and also get rid of some assets due to the coronavirus crisis. The coronavirus crisis has hit the global aviation industry hard, with African carriers alone expected to lose $6 billion this year in revenue. The carrier, in which Air France KLM holds a small stake, was struggling long before the outbreak, posting 2019 losses of almost 13 billion shillings. It cut salaries by as much as 80% when the crisis started and sought a government bailout to help it take care of running costs after it grounded its planes when Kenya stopped commercial passenger flights to curb the spread of the coronavirus. The government declined to bail it out, opting to press ahead with a pre-pandemic plan to nationalize the carrier, part of wider reforms of the East African nation's aviation sector. And business activity in Egypt rebounded in June, even as job losses accelerated in an economy just emerging from the coronavirus lockdown. A measure of conditions in the non-oil private sector bounced back to the highest in 4 months, thanks to slower rates of decline in new business and activity. Its Purchasing Managers Index for Egypt rose to 44.6 in June from 40.7 in May, remaining below the threshold of 50 that separates growth from contraction. A turnaround from April's record low is gaining momentum in Egypt, with many restrictions recently lifted as the coronavirus outbreak shows signs of stabilizing. Still, rising cost pressures at the Egyptian firms forced them to adjust by reducing employment at the quickest rate in nearly 4 years. And that's a wrap on the show. Thank you for watching. I'm Chimeze Obi Iwago.